sterling got a little bit knocked. I picked up on a food analogy yesterday with ING, which was about Big Macs and fillet of fish. Overnight, writing up about the DUP. Could they be tempted with more cash? Theresa May could find another government, the EU bends, or hard Brexit looms. Which do you think at this stage, or do you think we will get a deal over the line before Christmas? Will there be a great capitulation by all?
Well, so our base case is that we're moving in the right direction, and that's reflected in the price of pound. We remain pretty constructive on sterling over the next couple of months. And our soundtrack for sort of November was you've got to have faith. We're tempted to drop another classic by saying that the only way is up, but it's really contingent on the transition deal. That's the key here. So if we can get a transition over the line, take some of that economic uncertainty off the table, we could well be seeing the pound trading up to 140 against the dollar.
The only way is up. Is it? Because, I mean, you talk about the trashy nature of the pound. Explain to us, Viraj, what's trashy about the UK currency right now, and why the only way is up?
It's so volatile, it's so noisy, it's trading under this unique uncertainty that we've never seen currencies trade under. We're trying to make a future guess about what Brexit is without knowing the facts, and that just leads itself to short-term mispricings. So for us, we focus on the near term, what's happening now, and right now we see a lot of political uncertainty priced in, markets underestimating the cyclical benefits of what a transition deal could bring. That's our base case. We do expect a transition early next year, and therefore the pound should rally up to 140.
And you talk about that transition deal being underestimated in terms of the cyclical economic benefits, but you also talk about it could unleash a new wave of animal spirits. I think you're being overly optimistic. I'm going to challenge you slightly. I think that's rather optimistic in the backdrop of an aggressive carney. I'll see you and raise you.
I think when we look at the momentum indicators in the economy, everything's come to a standstill. Investment, confidence, investment intentions. I think everyone needs a bit of clarity, one way or the other. Are we going to get a deal? Are we not going to get a deal?
Do you think transition is enough to unlock that? Because really what we need to know is the shape of a trading deal. That needs to include financial services. A transition deal heals the wound.
I think for 2 years, it would be enough just to unlock 2018. There's too much pessimism. We're not calling for the UK to rebound back to 2% growth. Just a couple of percentage points at a time when the Bank of England is tightening would lead to a steeper curve and a stronger pound. We're not calling for the stars. We're not expecting the pound to rally 10, 15% on this. Yeah. Just a couple of percent higher in the right direction.
And if the first quarter of 2018 is make or break for the pound, which I know you've talked about in the past, if that is the case, it's just around the transition that you're anticipating we learn in the first quarter. We will not know anything about the future trading relationship by that point.
I think it's pretty optimistic to know anything beyond that. But first quarter seems to be this idea, anecdotally, if you look at survey evidence, a lot of businesses are saying that we'll make worst-case contingency plans by 1 year out from Brexit. So if that doesn't happen, that's the make-or-break moment for the pound. We don't think there'll be a watershed moment, or one day we'll wake up and the pound will be trading 20% down. But over time, definitely, if that wasn't to happen, the pound will gradually go down. We've got the worst case for sterling, 120 against the dollar, but that is the worst case of tail risk.
Look, the market is also repriced. I mean, in the wave of our enthusiasm up until yesterday at lunchtime, the market had repriced the ability of the Bank of England to do another rate hike earlier than perhaps originally anticipated. You talk about the carney put, and you talk about perhaps the market has misunderstood the raising of the rate and the propensity to raise more. It was a defensive rate cut in your view, but why have we misinterpreted this carney put?
Well, I think this idea that the Bank of England were reacting to put a floor under the pound and just provide it a boost, I think that's a bit of a stretch, to say the least. Yes, the pound is a thinking in the policy reaction function, but when it comes to the pound, remember this, we need internal and external balances. Too often than not, economists focus on the external balances when it comes to currencies. The pound actually has an internal dynamic to play, and from a point of view from the Bank of England, when it's adding to inflationary pressures at a time when we just don't know what the speed limit of the UK economy is. I know the Bank of England expects it low, but we just don't know because Brexit holds the key there. I think it's pretty obvious that they need to do something, and just a gentle tightening just to keep the curve steep.